Welcome to Nasdaq Trade Talks. I'm your host, Jill Malandrino, Global Markets Reporter at Nasdaq. Joining me back at the market site, we have Dave Mazza. He is the head of product over at Direxion ETFs, and we're going to take a look at an ETF that provides equal weight exposure to the Nasdaq-100, our proprietary index. Dave, it's great to have you back with me, as always. Now, let's learn more about these ETFs. They're strategic weight ETFs. What does that mean?
Yeah, so it's maybe a complicated term, but what it simply means is that we have a suite of ETFs that provide exposure to what is traditional indices, but in a different way. And in the case of our equal-weighted Nasdaq product, it's just that. It takes the Nasdaq-100 that investors have known for years, but it provides equal-weighted exposure to all the companies, unlike the Nasdaq-100 itself, which is what's called market cap weighted. So the largest companies would receive the largest weight.
Does this benefit investors in any way? Does it take some of the risk exposure out?
Yeah, that's exactly right. So, the Nasdaq-100 provides exposure to those 100 largest, most liquid companies on the Nasdaq. But a knock of that could be, well, you're overly concentrated in those largest companies, right? Just because you simply, by their weightings, it's going to drive performance. When you equal weight companies, you actually get the benefit of a potentially equal contribution coming from even that 100th company compared to that largest company. So over the long run, investors can benefit from the diversification that you can have, but still gaining exposure to those names that you might be familiar with or want to have access to with the Nasdaq-100.
Right, and it's so relevant now because we're in the thick of earnings season. So when you have those heavyweights come out, like a Microsoft and Amazon, we have Apple coming out tonight. And if you're watching the replay, it is October 30th. And when those names either miss or beat, we hope they beat, that's where you get the big movements in the Nasdaq-100.
Yeah, of course. So more recently, we've actually begun to see interest in our particular ETF, QQQE, which provides that exposure because of that very concern, is that people still want to have exposure to many of the tech names and consumer names that are found on the Nasdaq, but are concerned about the potential for negative reaction if companies actually miss earnings. Now, to your point, companies have been beating earnings this particular quarter, just as they have in the past. So it's, in my opinion, it's not really an either-or situation, meaning I only want the market cap weighted approach or the equal weighted approach. They can really be either used in tandem with each other, or again, for someone who wants that in their portfolio in times where they maybe want to get a bit more defensive in regards to not just having the largest companies drive the performance, but having an equal weighted contribution, it can be a great tool for them.
Right, and also on the flip side too, there are a number of companies that don't have such a heavy weight in that are performing quite well. It's just that they don't have that kind of exposure. This evens the playing field.
Yeah, exactly, and that's a big part of it. So in this environment, we know that the largest names have actually done best this particular year, as they have for a few years. But in certain areas, like 2009, for example, an equal weighted approach kind of coming out of the downturn in the markets did unbelievably well because you're getting contribution from names that you might not be as familiar with, but they're still important names if they're still within the 100 largest companies on the entire Nasdaq. Right. These aren't tiny unheard of companies. They just might not be in the news as much as some of the names that are in the top 5 or top 10.
All right, now let's talk about Direxion. Anything new, exciting, 2020, more product coming online?
Yeah, that's right. So at Direxion, we're always thinking about new ideas, both for tactical traders with our leverage and inverse ETFs, but also increasingly thinking about more exposure-based tools. So whether it's QQQE and strategies like that provide differentiated exposure to well-known area of the markets, or areas that are more thematic in nature that investors may be able to use to complement additional parts of their longer-term holdings in portfolios. So we're pretty excited about the potential growth of our particular lineup and ETFs in general looking into 2020.
All right, great stuff. Great to have you back with us as always. And thank you for joining me on Trade Talks. I'm Jill Malandrino, Global Markets Reporter at Nasdaq.